Okay, good morning. Hi, everyone. I'm Ellen Laurie Hoffman. I'm the Executive Director at the Center for Impact Finance, and I'm going to be moderating this amazing panel. And I'm going to introduce everyone. I'm going to take half a minute to introduce myself again. The Center for Impact Finance, if you're not familiar with us, we are an applied research center focused on access to capital for underserved communities and closing income and wealth gaps. We do practitioner-driven research, training, and facilitating collaboration, and we are associated with the Carsey School of Public Policy at the University of New Hampshire. And community lenders are the constituency with which we work most deeply. So really excited to be here at NAAHL today, and I'm going to introduce briefly our panel. We only have an hour, and we have a lot to talk about. But the panel, again, is Scaling Lending, Scaling Impact through CDFI and Bank Partnerships, and I am really delighted to be here today with Kevin Goldsmith, Managing Director for Community Development, Tax Credits and Intermediaries Lending from JPMorgan Chase, Bill Bynum, Chief Executive Officer from HOPE, Annie Donovan, President and CEO of Raza Development Foundation Fund, and Desiree Francis, Managing Vice President of Community Finance from Capital One. And just take a minute to sort of set the stage on community development financial institutions. There's been a lot of talk about them lately. We know that CDFIs support economic development in underserved communities all across the country in every congressional district in the United States, including in rural and tribal communities. CDFIs offer flexible financing tools, and they're key drivers in the development and preservation of affordable housing. And the largest sectors in which CDFIs invest are residential and commercial real estate and consumer and business financing. We're a research center, so I'm just going to share a little bit of data before we jump into a conversation. Based on the CDFI Fund's most recent annual compliance report, ACR data, which is from 2023, on an industry average basis, CDFIs leverage their net worth by a ratio of 9.6 to 1. So that means that $1 invested in a CDFI on average would be expected to generate an additional $9.60 of assets on their books that would be deployed as loans and investments to communities. As of the end of fiscal year 2023, CDFIs had made $304 billion in loans and investments in communities across a total of 19.2 million deals. CDFIs have helped almost 8.8 million borrowers with development services like credit counseling, financial education, or business assistance. And they have proven to be well-managed institutions that have low delinquency rates. So with that, I'd like to talk to our very experienced panel. Let's go back to the beginning of the CDFI field. Annie and Bill, I know you have deep experience. Can you help us recall why the CDFI Fund was created in the first place more than 30 years ago?
Yeah, I was there at the beginning, right? In the beginning, it is pretty clear that, certain communities, whether it's for a mortgage, a small business, financing for critical community infrastructure like health care centers, charter, schools, nonprofits, some places just have never had the same adequate access to financial, not just financing, but financial capability, the tools to put those resources to work. If I'm in a wealthy person in New York, I can go to Goldman Sachs will help me get capital. They'll help me provide capital, put the capital stack together, and advise me on how to navigate the financial system. Well, in so many places and for so many people, that's not as readily available. And so, for decades, community development credit unions, small loan funds had done that work and filled in the gap, but they had never been adequately resourced. Fortunately, Bill Clinton had been raised in and had served as governor of a state and where he saw how lack of access to resources debilitated the economy and kept people in the state from reaching its potential. And he had been exposed to Shore Bank and Muhammad Yunus, at the Grameen Bank, and one of his campaign platforms was to create 100 community development banks and 1,000 microloan funds. And when he became president, the CDFI fund was created, and so that gave credibility and sparked the evolution of the CDFI, the expansion of the movement, the industry, this sector, and it gave credibility, and it gave the certification has given many investors, banks, not just banks, but private companies, individuals, and philanthropy, it gave them comfort and a safe harbor to make investments and know that they would get a certain level of whether CRA credit or just capacity and safety when they're in security when they're making their investments. And so that is what sparked the CDFI fund, from my opinion. And I think we've all seen, we've heard the data, we heard your data, we heard Rodney talk about it, how important it has been and it is to so many communities across the country.
And so Bill, as expected, did a great job covering the ground. I'll just add that CDFIs don't actually have one origin story. So there are different, the CDFI fund, and when it was created under Clinton, he had this idea that he wanted to replicate Shore Bank in 100 places. But there was a pretty active, and some of us who were around for that, lobbying effort, right, by the loan funds that came in and said, what about loan funds? And the credit unions, we already exist. And the minority development banks, been around since Freedman's Bank in 1865. So, it's a complex, not one size fits all, because our communities are different, and the needs are various. And so CDFIs have taken on really the complexion of our country, and the complexity of our country. And the reason I think they remain so robust right now is because of the connection to community. So whatever community you're in, Bill's CDFI looks a lot different than mine. But that's a good thing, because Bill is serving his community in the way it needs to be served, and so are we. And with different forms, with different business models. So that's part of what makes us robust at the community level, but it also gives us resilience at the political level, because all politics is local. And the reason we have so many, like right now when we're under threat and we see Republicans stepping up for us, it's because of what's happening in their communities, because CDFIs have done a good job showing them how this matters to their constituents. So just adding that thread, that diversity has always been important to who we are and important to our resilience and thriving.
Thank you. So we've obviously evolved over the decades and now find ourselves in a sophisticated, impactful sector with a diversity of CDFIs, as Annie has pointed out. What's changed about the way that CDFIs, and I think particularly we're talking about CDFI loan funds, operate, the mix of public and philanthropic and bank and investor funds that they use to meet underserved community needs? How important are bank partnerships to CDFIs today? And I'll throw this to anyone that wants to respond on the panel.
Sure, I'm happy to respond. First off, thank you to NAAHL and Sarah for the invite of participating in the panel. CDFIs are part of our financial ecosystem, right? They are able to provide, as Bill mentioned, capabilities to communities that sometimes are often hard to reach by larger institutions. They help to make small businesses or consumers ready, basically, to enter into the mainstream financial system. I think what's changed is that, the needs are greater than they have been in the past, and so that really speaks to the importance and the need for continued availability of the capabilities that CDFIs can bring to community.
I guess I would add on to that, well, first off, thank you to Sarah and the entire NAAHL team not only today for hosting this awesome conference and a pleasure to be on this panel, but also your leadership and your work and coordination with the other industry trades supporting CDFIs, whether that be the CDFI Coalition or Community Bankers Association or Inclusive. I mean, the coordination to get the letter passed, the bicameral letter that was about a week and a half, 2 weeks ago, is phenomenal work by all of the groups working together, and it truly takes a village. And it just, I think, that great coordination and advocacy has really helped demonstrate and improve the true bipartisan support of the CDFI fund and the CDFI industry. So I do want to pause and thank you guys for that. So that was a tremendous accomplishment. So I guess to your question around the CDFI industry and its growth, I think, I like the way Annie highlighted the fact that there's a lot of differences between the three, I guess you could say four if you include venture capital funds of CDFIs, but between the credit unions, the banks, and the loan funds, there's a dramatic amount of difference. But I think the commonality, like Annie said, is the responsiveness to their local community needs. And then from a funder's perspective, the thing that they also have in common is being part of the continuum of capital. Banks will only go, or sometimes only able to go, so far in extension of credit. And CDFIs, regardless of which type, are often there, to help fill the capital needs that are in the community that are not being served by conventional capital. And so that continuum of capital and the place and the role that they play is so extremely important. And the Clinton administration in passing the CDFI fund and the Regal Act to establish it added that credibility and that standardization for the CDFI industry and having to get that annual certification. So I think that's really been amplified, and that credibility and that work in leveraging different pieces of capital has really been demonstrated, I think, with the PPP funding and serving unbanked and underbanked communities. I just heard a stat this morning published by the FDIC that over 18% of the U.S. is either unbanked or underbanked. And just to pause on that a moment, that's like almost 1 in 5 people, right? I mean, that's an extremely high amount. If you think about all of us that have bank accounts and access to credit, there's 1 in 5 of us that doesn't. And so the CDFIs and their role are extremely important and engaged to serve the whole and fill that continuum of capital.
Great, thank you. I want to talk a little bit about bank and CDFI partnerships specifically, and I'm going to go back to Annie and Bill. As banks have become more important sources of capital for CDFIs, how has that changed the scale and scope of the work that you're able to do and the tools that you use to do it?
Well, I failed to say last time thank you to NAAHL, and I want to give a shout out to my colleague, Melissa McDonald, who serves on this board. She's our Chief Operating and Chief People Officer. I also want to say I was here 2 years ago when it was Buzz Roberts' last meeting, and I just want to congratulate Sarah, because when you have to follow an icon, like I followed Tommy Espinosa, who is a legend, and for the person who has to follow Bill Bynum, call us. You can do it, it's doable. Sarah, I just want to congratulate you on the way you've really kept this organization shining, relevant, front and center. So the partnerships between banks and CDFIs, well, the first question laid out the case for it, why it's needed, and how has this impacted us? Well, I mean, we've gotten to scale. In 1996, when the first round of CDFI grants FA went out, there were 196 certified CDFIs, and our assets under management were tiny. And without the CDFI fund, that pulled in banks because, prior to that, we were just little bitty. We were bumping along. We were raising individual investments, and the nuns were funding the loan funds and the little deposits. But CDFI fund then brought banks in and shifted our balance sheet completely. And you can see that in the data from early on to now. Most of us, more than half of our balance sheet, 3/4 of our balance sheet is bank financing. And so that changed the game. And I think it's institutionalized the relationship and helped create our space as a legitimate part of the financial sector. But it also comes with constraints, right? Because because you all have credit boxes that we have to adhere to. And while that's helpful on the one hand, on the other hand, sometimes it prevents us from really going deeper on the impact side. But what it really does is it makes us have to go figure out where the additional investors are who are willing to do more catalytic investing. And I think it's particularly powerful for the two banks that are up here, where you've thought about your philanthropy helping as well has been really, really impactful. We've had a relationship with JP Morgan Chase since 2006. And Kevin, do you know that we have done 13 new markets tax credit deals totaling $463 million? The QEIs were $463 million. That's pretty amazing. And one of our recent deals was the Uvalde deal, where the rebuilding of that school was done by a lot of CDFIs. It was a village of CDFIs, but Chase stepped in early on that one. So some really impactful stuff. You also had the Pro Neighborhoods initiative that we benefited from. And so when those kind of resources are paired, it really packs a very powerful punch. I'm just looking at Kristen here from Citi, and your resources have done the same. I know Capital One, our relationship with you started a little bit later, but we've done multiple new markets transactions with you as well. You funded a really critical study for us in 2020. Coming out of the pandemic, we have a very robust charter school investment practice, and you helped us do a study that looked at learning loss, and particularly in the Latino and African American communities, and to be able to document what the learning loss is and how do we get out of this was a really important study. Both of your banks helped fund a landscape study that we released in March on Latino CDFIs and how CDFIs serve the Latino community and how Latinos are leading in the CDFI sector. Very important study. So it's changed the complexion. But I just want to do one plug. And I know this is not a good time to do it because we're under a lot of pressure and we have to be worried about softening in our portfolio. However, for the back of your brain, the data and the stats are there. Everybody can recite it. Deputy Secretary Hood cited it, and Bill cited it, and you cited it. But do you know that y'all banks make us hold 20% in net assets? And we, since 19 whatever, our loss rates are 2%, maybe at worst. So, that net asset requirement hasn't budged. And I just wonder if we shouldn't think about dropping that so we can leverage more and do more good.
Bill, do you want to add anything to that question?
Yeah, I think increasingly banks acknowledge that CDFIs give them a way to extend financial services in places and to people where they don't, not only where they don't have a presence, but where their models just don't work as well. Just to your point, Kevin, you talked about the high numbers of people that are unbanked or underbanked. Well, I work in Alabama, Arkansas, Louisiana, Mississippi, Tennessee, and now in Georgia. And in our footprint, HOPE's members of our credit union, almost half either did not have a bank account or were using petty lenders and check cashers before they came to Hope. And so that is not the market. That's not the priority for traditional financial institutions. And so CDFIs step in gaps and provide financial resources and help the economy work in places that banks depend on but don't have the tools and don't have a presence, are not best equipped to serve. And so that's a critical role. I don't think it's in a country that's becoming increasingly diverse and in rural places that are hard to reach, and when you have fewer bank branches, you've got to be able to help the economy work in places that the historic bank model and that traditional bank models don't work as well. And so I don't think it's an accident that Jamie Dimon spoke at the Opportunity Finance Network conference a few years ago, and he came to Jackson, Mississippi on a bus tour going down to Birmingham and across the South, and I think he understood, and talking about partnerships with CDFIs were a key part of his conversation. Desiree, you and your colleagues, I really appreciate you and Wells Fargo being key partners at a gathering that we convened in Jackson a few weeks ago to talk about, in this current environment, how do we find mission-aligned allies who understand the importance that it's in our collective interest to invest in people and places and make sure that regardless of where they were born, who their parents were, what their income is, whether it was red or blue, give them the resources they need to support their families and contribute to the economies. And CDFIs play a critical role in that. We've been really fortunate to have, in a place where we don't have a lot of major banks have branches, and hence CRA, easy CRA assessment areas, we've had to import capital. And that capital has come, and those partnerships have come from Capital One and Wells Fargo and JP Morgan and Bank of America. I still have some work to get with Citi. I need to get Mississippi on that map outside. I'll talk to Brandy about that. But the partnerships, Goldman Sachs, we in PPP, we went from doing 50 small business loans a year to 5,200 paycheck protection loans in 18 months. 50 loans a year to 5,200 PPP loans in 18 months. And we got liquidity from Goldman Sachs to do that. We have had over $70 million in new market tax credit partners projects that we finance in partnership with Capital One. Did a great hospital in northern Mississippi in partnership with JP Morgan. Regions Bank, which is the largest bank in our footprint, with the whole headquarters in our footprint, we've taken 7 of their branches and converted them into Hope Credit Union branches. During the financial crisis, over 2,300 bank branches closed, 93 and 95% of them in low-income census tracts. Those are the people and places that CDFI serves. These communities didn't all of a sudden stop needing access to financial tools, and so someone's got to step into the gap. And that's where CDFIs play such a critical role. And so we took those region branches, and in many of the rural towns and inner cities, we are the only financial depository in those communities, in that census tract, in those communities. And left without a CDFI, these communities down the vine, or they pay too much of their already limited resources for exorbitant predatory financial services. And so the bank partnerships are critical. Really excited about some things we're doing with Desiree, you and your team, to do some second looks on auto loans, referrals. We're partnering with her, their data and tech team, to help us to reach people in places where we don't have. It's just using technology and data. And so it's a range of partnerships that really can help CDFIs increase our ability to do the work that all of us need to make our economies work.
Thank you. So Kevin mentioned the sign-on letter that we recently saw with more than 100 Senate and House Republicans supporting the CDFI fund Clearly, the community and economic impact of CDFIs is important for a wide range of communities, urban, rural, tribal, and suburban. Community outcomes include much needed affordable housing supply, other neighborhood investments, healthcare facilities, small business growth, disaster recovery, the list goes on and on. Can you all, and this is for anyone on the panel, share some examples of community impact? Bill's given us some and Annie has as well, but more examples of community impact that were made possible through your CDFI and bank partnerships specifically.
I will just, continue to build on, I think, some of the examples that Annie and Bill shared. I'll start more broadly and then I'll go to like some specific examples. But in addition to capital that banks can provide, people also is one of our greatest resources. And so Bill talked about data and technology. We have a pro bono practice where we are bringing our associates basically to help to solve problems that nonprofits and CDFIs are facing, to really help those organizations to be able to increase the impact and deliver, make their operations more efficient. Annie mentioned around research. We have an insight center that we partner with other organizations because we really understand the value and importance of data and bringing the data into conversation, both with policymakers, but also to help to inform, like, are we targeting and focusing and deploying dollars in the most effective and efficient way? From a policy perspective, we leverage our resources on our government and policy affairs team to partner with organizations like NAAHL and other trade associations to advocate for like the value that CDFIs play in the financial ecosystem more broadly. And then we also think about philanthropy and being that like catalytic, first dollars in, because oftentimes when we think about CDFIs and the value that they bring, they're oftentimes the first funders. Basically, they're providing pre-development, they're providing acquisition. We're in this moment where there's a housing crisis. The tax credit, the wins that we got on the policy side were really great. And so that's going to help to generate more affordable housing. But there's also the need to make those projects ready to be able to get the financing. The other thing that we think about from partnerships with CDFIs is how can they help us to think about deploying programs as well as product from a delivery perspective. One of the things that my team does is we finance affordable housing. We finance over $1 billion a year. But we don't only think about the bricks and the sticks of the properties, we think about the people that are within them. And so we partnered with a CDFI to pilot a financial well-being program, because we heard from the residents in the properties that we financed that like financial stressors could potentially contribute to their housing instability. And so we partnered with a CDFI who delivers financial coaching that's making that available to the residents in that building to enable them to address that financial stressor, and then for them next to think about building credit, because as was mentioned earlier, credit is important basically as we think about enabling people to have greater opportunities as well. So I think those are just other examples beyond capital in terms of like what partnerships with a bank and a CDFI can look like.
I would like to build upon like some of the examples that Annie highlighted. So Annie, thank you for the wonderful partnership, 13 new market tax credit transactions, and then just the credit and data and impact sharing that you've provided our organization, for so many years. One other, I was going to mention the Uvalde School as well. I mean, it's over, it's capacity for 800 elementary students that, for the rebirth of that school in Uvalde, Texas. And another project, that Annie's team and I, when it was probably like 12 years ago, looking at in northern Texas, in a rural area outside of Abilene, actually was a pet food processing center, which brought a lot of jobs to that community. So completely diverse, different type of asset, but responding and underwriting to the community's needs for supporting that pet food manufacturing. And when we went on the site tour, it was crazy. There was like all these antlers hanging all over the walls, like from deer hunters, and then also like from when they shed their antlers at different times. So I mean, just the diligence with which Annie's team and Raza approached that to look at, does this going to create the jobs and deliver the impact, and are they sustainable jobs for the community is phenomenal. Another project that we partner on with several CDFIs over a couple of different transactions, and I have to give a shout out to Nikki for South Carolina, was Highland Baking in Spartanburg. They make a lot of the bread that goes into Panera Bread and other bakers. There's over 100 jobs created from that facility's continued expansion. They were an Illinois company that expanded into the southeast to handle more of their eastern seaboard presence, and the capital that they received from the new market tax credit financing really enabled them to really build and build upon that center. But beyond just the new market tax credits, our team provides capital to CDFIs to offer them liquidity and then hopefully support all of their capital needs as they're funding underserved communities. And so, a couple of recent examples, we provided capital to Grameen America and, microfinance for a lot of small entrepreneurs, and just their ability to coach and support, and the technical assistance they provide, I think, is very common throughout the CDFI industry, and that technical assistance they're providing to their borrowers. And then, another one that, I think I highlighted at OFN is we worked with Rock USA in providing them capital. Rock USA is resident-owned communities, enabling those homeowners of their mobile homes to collectively buy the land underneath their homes, so they have that stability of their overhead and their rent, their mortgage and PITI for their house expenditures and their cost of living. But one other thing just to mention around CDFI partnerships is the data and the innovation that they provide us. So the JP Morgan Chase Institute provides a lot of great studies and analysis, but a great majority of that is informed by the partnerships that we have with CDFIs and the innovative capital and responsiveness that they are in measuring impact and testing new models, and how we can support undercapitalized communities.
I just want to add one exclamation point to what one thing Desiree said, and you talked about capital readiness, and that is so important that piece of the work is part of the magic of what we do is getting our borrowers capital ready, and I'm sure, Bill, for you guys too. It's all about the education and getting people ready to take on credit and use it responsibly. Yeah. And so that's a really important piece, and we're always grateful for that support.
Yeah, I think it's really also important to underscore, while we do everything that traditional financial institutions do, much of what traditional financial institutions do in places where they're not, but even beyond that, I think the level of innovation, the level of pooling resources, putting together capital stacks, making it possible even for banks to invest in it. The CDFI fund has played a critical role in that. Philanthropy, private investors, other corporate investors have been critical, and so knitting that together is not a simple thing, but it is so important, and it's even more important in the environment that we're in now, where we have so many of the safety nets that communities that we serve rely on that are no longer there. Housing supports, food supports, healthcare supports are putting incredible stress on already limited resources. And so that makes the jobs that CDFIs do already lending to challenging projects, and even more so when those resources are even more scarce. And so, to your point, Annie, I think both being more innovative is not just something the CDFIs have to do, it's something that all investors need to do, because we're not in, this is not our the CDFI environment that we were in a few years ago. And it's not an economy that we were in a few years ago. And so making sure that our communities, we put together the structures that allow them to navigate this minefield is critically important. And I think also there, speak from my experience in the Deep South, and as a minority depository institution, we did analysis of the CDFI funds data a few years ago, and it showed that minority-led institutions had, represent 30% of the CDFIs, only were able to attract 11% of bank-supported investments. And so there's disparities in terms of access. If those disparities didn't exist, there would be another between $2.5 and $3 billion more investment in communities that are disproportionately under-resourced.
And I would just add, Bill, when we did the Latino landscape study, we found that for Latinos as well.
If you look at Rodney mentioned public welfare investments, 48 billion, I think, in bank investments under that category, less than 350 million in the 5 states that I serve. And then so there's, it's easier to make investments in places where there's CRA investments, where you have a more robust economy. But in places where the need is greatest, it's going to demand that we all step up and get more innovative and figure out how to help our economies work, because we all benefit from them. And if we don't, then the results could be really devastating.
Any other examples? I want to go back to just the idea of CDFI and bank partnerships and ask Desiree and Kevin, for your financial institutions, when you are partnering with the CDFI, what makes a strong partnership? How do your partnerships with CDFIs differ depending on the market or the type of investment? Can you speak to that?
Sure. So, we look for CDFIs that have shared values, shared purpose. We also look for where is there that opportunity of we can bring a strength basically to support the activities of a CDFI. And so Bill mentioned we just launched with Hope a second look program. So we are a large auto finance lender in the country, and we know that having access to transportation increases people's economic opportunities. And so the pilot that we launched is if we're denying someone for an auto loan, we have a bridge that we have created that will refer them over to Hope Community if they so choose to go there, where they can apply for an auto loan, but then also to get coaching, and that hopefully the next time that they're ready for a loan, that they're going to be ready for traditional mainstream banking. And so this is something that we see that's important and would hope to look to expand more broadly, but are testing that out and is doing that with Hope Community as an example. Another example of a partnership is that we at OFN, we announced a $45 million partnership with OFN that's going to be focused on affordable housing as well as small business, and we're pairing that both with debt capital as well as with philanthropy because we see the connectivity and the tie-in of that, which they will lend to their member organizations to really help to stabilize that. And then also part of that philanthropy is really going to help around data and technology, because we understand the importance of that. And I think particularly in this moment, having access to data to be able to share what are the outcomes that CDFIs are driving and how they are connected to like the economic potential and growth and engine of communities, I think is really important in this moment. And so we see an opportunity where we can bring a strength that we have in terms of data and technology, and how can that help to benefit the entire ecosystem for CDFIs.
Yeah, I think a lot of similarities for us at JP Morgan Chase. One of the things that when we're talking with our CDFI partners is we're really trying to listen even more than we talk, right? I mean, CDFIs know the communities where we want to be a partner in serving. They know the challenges, and they also fully understand the opportunities and do an awesome job of highlighting that for us and walking us through the risks and mitigants of any specific portfolio. The impact alignment and truly wanting to drive capital to underinvested communities and trying to maximize the net subsidy, whether that be through a tax credit or whether that be through reduction in interest rate or leveraging philanthropic sources that they might receive either from the JP Morgan Chase Foundation or from other philanthropic givers. Is something that's extremely important to us to really understand the outcomes and how those dollars are being leveraged and driving strong impact. And I see a couple of partners in here, well, a lot of partners actually, but to call out Dan with Low Income Investment Fund and Stacy with Community Impact Capital out of Chicago, Community Investment Corporation out of Chicago. The work that we've been able to partner with them on supporting emerging developers has really been phenomenal, and really understanding the work that they do and where we can do more directly in supporting developers as they continue to get bigger and need larger sums of capital or get involved in more complicated LIHTC financing where they might be doing 5 to 10 unit properties that are naturally occurring affordable housing or Section 8 housing, but once they take that next step into getting into a large scale, extremely complicated capital stack with LIHTC, how can we support them in that next chapter of their evolution as a developer, and how can we partner with the CDFI in doing that? So really, I think we learn a tremendous amount from our CDFI partners and how we can be better responsive to the needs of the community.
I think it's worth it to just shout out our banking partners because you understand us, you understand the industry, and we appreciate that you work against your own constraints to try to meet us where we are. So I think over the years that's only grown stronger. So that is, I think, an important dimension to the way that banks and CDFIs partner, is that the folks who are in the banking positions really do get us. So thank you.
Great. So despite the broad bipartisan support in Congress, the CDFI sector has faced headwinds from the federal government this year. I don't think that's news to anyone in this room. We've seen delays with the new recertification process and uncertainty about the FY 2025 funding. In September, after sustained advocacy from the CDFI sector, including NAAHL, and public and private efforts from the CDFI's bipartisan champions, the CDFI fund issued a supplemental NOFA, creating a path to release those fiscal year 2025 dollars. But the dollars, unfortunately, still aren't out the door. So I want to just talk for a few minutes about why federal partners are so important, and direct it first to Annie and Bill. But can you speak to why having a reliable federal partner is important for the CDFI sector?
I think, for first, I think it's important also to acknowledge, we've talked about the Republican letter. There was signed by 100 members of Congress. There was also a letter signed by 100 Democrats. So I think we talked about the bipartisan. I think clearly we have to navigate this environment, and we want those who are in control to know how important these resources are in their community. But I think it is it is important for us to also not further the divisive narrative. It is a bipartisan support that has 100. What else in Washington has had 100 members of both sides of the aisle say, yes, this is important, and it's something we need to celebrate. We have to be strategic in how we work in this environment. But it's I think that's an exciting thing that we have to build on, and I think they understand that the grants are important. There are smaller CDFIs. There are CDFIs located in communities where resources are less available. It's $41 philanthropic giving in the Deep South states I work in, compared to $450 US, $4,000 in Silicon Valley, $2,000 in New York. $41 per capita philanthropic giving. Again, no bank CRA investments, and so those grants are critical to fueling those institutions that are stepping in. But bank investment is the primary source of capital that many CDFIs rely on, and banks need the certainty of that certification. They need that safe harbor. I've had many banks talk about being CRA agnostic, and that sounds good, but we all know the easier we can make it for banks to underwrite and do those investments and get that credit, the more likely those resources are to flow. And so just that certainty of the certification, giving banks that safe harbor, it is existential threat if the CDFI certification goes away. And all the work that has been done over the past 30 years, plus years, at Treasury and many years before that by other CDFIs who paved the way will be significantly hampered if that certification goes away. And again, it's at a time when communities need it more than they have at any time in my lifetime. I see some of the things and the protections and supports that I thought were settled doctrine in the courts not being supported, and that disproportionately hurts the people and communities that CDFIs serve. And so it's CDFI certification, I just can't say enough how important that is to giving certainty and stability. We all want some degree of assurance when we step out on that limb. Mm-hmm. And so we want to make sure our investors and our partners have that the certification, the assurance that a CDFI certification provides.
Well, and let's make no mistake, the federal dollars and the federal programs drive our financial sustainability and growth. That is our source of equity capital. So when the banks invest in us, that's great, but we're not really earning much from what we get from you. When we take in $1 of financial assistance and we put it out on the street and it comes back in, we unrestrict that, and that's what builds our unrestricted net assets. And I'm just going through our year end right now and looking at what we're unrestricting. We're gonna have a great year because we're unrestricting a lot of assets, but it's FA, it's ERP, it's Capital Magnet Fund, and then the fees from new markets. So, we can survive. Many of us are very strong, and we have, because you've made us keep 20% net assets. We're strong. We're not going anywhere. We can take a bump, but we're not going to be able to grow. We're not going to be able to innovate. We're not going to be able to double down on impact as the world around us is suffering more. So this is critical. But I think we have to keep the faith. I think that the CDFI fund it's in a bad spot right now, but the way I see it, the fund was moving toward, they were just about to announce new markets. They had reopened up FA, and we have to play the messaging game right now around some of the stuff that we do. But that was feeling like the momentum was coming back, and then the shutdown is really hurting us because the folks at OMB are getting their way. And that's where the rest of the world supports us. There are two people at OMB that are our nemesis, and they are having their way in this shutdown. And we need the shutdown to end so we can start making some progress, because those guys don't care about 100 Republicans. They really don't. So I think we got to congratulate ourselves for staying in the fight. We got to keep fighting it. We're doing the right things. But we really need this shutdown to end so we can get back to business and keep this rolling.
Desiree and Kevin, can you jump in as well and talk about why a reliable federal partner is important from your perspective for banks' community development efforts?
Sure. So federal partners are important, from a predictability, certainty perspective. But if I think about the fact that, the need is still there, so if we think about why the fund was created in the first place, it was to drive investment into communities that were underserved and under-resourced. And we heard earlier that the data is still showing that there are places that are still under-resourced and underserved, so the need is still there. And one partner or party can't solve all of the problems or the issues that we are still all facing today. So we need the federal government to be there alongside private partners, alongside the CDFIs themselves as well.
Yeah, I think Bill brought up the point around CDFI certification, and the CDFI industry has grown so much over the past 10 years, but definitely even just the past 5 years. And the certification gives the industry, and not just the bank funders, but all of the funders, kind of that stamp of assurance that the lenders and CDFIs are responsible, they're accountable, they're mission focused to serve low-income communities. And so what we've been partnering with other investors and funders to the space is, how can we help in continuing to give that confidence and build the resiliency? I'm optimistic that, like Andy said, we'll get through this shutdown, the CDFI fund will continue, and that certification will be there. But how else can we build more resiliency for the industry so it's not subject to a political fight, to have certification being on the table. There's a very broad support base for the CDFIs, not just big national banks, obviously regional banks, local banks, foundations, philanthropic sources, high net worth individuals. Thank you, Mackenzie Scott, among many, right? There's such mountain of support for the industry, and we want to continue to build on that momentum. And having a strong federal partners or partners across the board is completely essential to that.
Great, thank you. All right, moving to closing thoughts. So obviously we've seen some challenges for the CDFI sector in the past year, but challenges can also bring new opportunities. So I want to challenge each of you to share what you think is the greatest opportunity for the CDFI sector in the coming year, and what are the possibilities that you see ahead. And we can go down the line, or whoever wants to go first.
Yeah,
Anything with optimism.
I'll jump in. We have seen at Hope, and I think across the CDFI industry, that some of our greatest impact has been achieved when times are most difficult. After Hurricane Katrina, we had tremendous growth, and CDFI stepped in with partnerships and partners, because everybody understood how critical it was to come together and address those needs. Similarly, during the housing crisis, we went from 8 locations to 30 locations across the Deep South, partnering with banks, partnering with investors, partnering with allies who knew that those people didn't, just because banks were closing, they still needed support to help their families and their economies after George Floyd, during the pandemic. Talked about some of the growth that we saw then. Our most significant growth has been in times of crisis. I would argue that we are facing similar challenges now. And I mentioned earlier, we pulled together some of our partners, Capital One, Wells, Ford Foundation, Kellogg Foundation, developers, enterprise, nonprofits, CDFIs from across the region and across the country to come to Jackson, Mississippi, the poorest country in the country, one of the poorest states in the country, and talk about how we could work together to ensure that everyday people have the resources they need to prosper. We set a 10-year goal of doing that, and we are working to move that goal forward. Entrepreneurship, ownership, community infrastructure, things that any community needs to prosper, at some point needs capital. It needs the things that CDFIs do. And it's not just CDFIs in those communities that need it. Banks need it, local economies need it, and so I think we are in a really unique position to make the case, to put our closing argument and put to rest that CDFIs are an essential part of the financial landscape. And let's not, when the CDFI fund gets back up and operating, let's not just sell on business as usual. Let's think about how we can push the CDFI to be right sized, so that and to be fortified against, as you said, those wins. It's not a Republican or Democrat, red or blue. This is a heartland. This is an urban rural. This is an American opportunity and issue, and CDFIs play a critical role in it. And so we should let's beat that drum. Let the world know that we deserve, and the communities we serve deserve the investment to prosper.
Yeah, I mean, I'll just bounce off of necessity being the mother of invention, and necessity is the mother of CDFIs as well. Bill's right. I mean, for those of us that work in the industry, all of us, you know, when times get tough, that's when our juice gets rolling, right? We're ready. And that's what we're built for. And I want to give a shout out to Laurel Blatchford, who's here from Delivery Associates, because she's been working with us to conceptualize a pivot fund. And we've been talking to your team about it too, and talking to others, because right now is a moment to pivot, right? So we're going to be resilient. We're going to figure out how do we need to pivot? Because we're not going to stand still, and we're not going to let this happen to us. And neither are the organizations who are on the ground because of necessity. So right now we're aiming at how do we support groups to do that strategic pivot, and how do we finance that? So that's all about the optimism of the future. How do we find it, and how do we invest in it?
I love that forward-looking lean, because I do think like this is the opportunity for this sector basically to make everybody aware of like what are the impacts that this sector has in terms of like creating, building, enhancing thriving communities and creating opportunities, you know, for all. And I think like this is the moment to do that now. And I think to your point, it's also a great opportunity to think about like, what are the things that like the sector or your organization does well, and how do you like supercharge that? And where are the places maybe that there are opportunities to think about things differently, or how to use technology or data as an enabler of that? And so I am always hopeful, and I'm optimistic in this moment. And for Capital One, I think this is a real opportunity for us to help to be a partner and a continued partner in that. And through our community benefits plan that's $265 billion that we committed to as part of our acquisition of Discover, we have committed to grow our CDFI capital deployment to $600 million, which is a 5-time increase, as well as thinking about how we can leverage philanthropy as well as our people resources and pro bono services to help to support and enable this sector to continue to grow and to continue to thrive.
The CDFI industry is filled with like phenomenal people that are awesome at solving puzzles, great at communications, and really building coalitions. So to like think about like utilizing those in the next year. Solving puzzles, I think Sarah mentioned earlier, just the pace of innovation or pace of change, I should say, on policy, right? And so being able to test policies, show like where they're working, where they're not working, and communicating that to other stakeholders so that maybe those policies can be amplified or moved on to another policy that enhanced in a different way. The communication, I think the CDFIs are phenomenal at speaking multiple languages, right? CDFIs speak the language of Wall Street, they speak the language of Main Street, and they speak the language of rural communities, they speak the language of urban communities, and all across the spectrum, and being able to tell the story, the universal challenge of low-income populations and underinvested communities, I think is a great opportunity to double down on that in this next year and bring in additional stakeholders and supporters under the tent because of the demonstrated proven work of CDFIs and the CDFI industry and the broad bipartisan support. And so bringing that additional capital resources and coalitions to the table. I know workforce housing has been mentioned as an issue. That's an issue for employers. That's an issue for universities. It's an issue for healthcare. And so, really continuing to speak all those different languages to help simplify and articulate a good way to bring capital to address those issues, I think is an awesome opportunity going forward.
Great. Well, we are right on time, I think. So any last thoughts before we wrap up? I think we covered it. So join me in thanking the panel and you.
How are we going to get out there?
Sure. I guess we have time for some questions from the audience, which I can barely see. Don't be shy.
We covered it.
Yeah, if no one has a question, just again, thank you to this panel. And I just want to also thank everyone in this room. We have many policy partners in this room as well as our members. It really was an incredible collective advocacy effort to drive the latest push to defend the CDFI funds, and it cut across our CDFI partners, our partners in the new markets tax credit space, as well as the Capital Magnet Fund. And I think that's what NAAHL is going to keep doing in partnership with all of you. We were also very proud to join a letter from banking trades and submit our own, and trying to bring up that narrative that this panel so well showcased, which is that banks rely on CDFIs, and it's a partnership that works. And that's a drum we'll be beating for a while, so thank you again. And before we break for lunch, we started the day with a video from Senator Crapo, who leads the Senate Republicans in the CDFI advocacy work. Later today, we're excited that Congresswoman Young Kim, who led the House Republicans, is going to stop by to greet the NAAHL crowd. And for now, we're also going to play a video from Senator Warner, who is the other lead of the Senate CDFI caucus, as well as a co-lead of the Neighborhood Homes Investment Act, and just generally a fierce champion for housing, CRA, and community development.
Hi, I'm Virginia Senator Mark Warner. I'm sorry I couldn't be with you today, but I'm thankful for this opportunity to wish you, the National Association of Affordable Housing Lenders, a happy 35th anniversary. You play a critical role in lifting up our most underserved communities, bringing together perspective of traditional banks, CDFIs, private investors, and nonprofit and public partners to help find practical solutions to increasing our nation's affordable housing supply. You're vital to the promise of America, not just in our cities, but in our small towns as well. This conference brings us together at a critical moment for the future of the economic development sector. And frankly, not just for that sector, but for our whole country. On October 10th, OMB Director Russ Vought made good on a promise to gut federal agencies, not by reforming them, but by trying to wreck them. Without warning, Vought fired every employee of the CDFI fund, which was created back in 1994 to promote economic revitalization in distressed communities. The fact that one single political appointee can cripple a federal office isn't just reckless, it's illegal, and it's part of a broader pattern. I was so pleased to see my good friend Senator Mike Crapo, who is the co-chair with me of the CDFI coalition, lead a group of 105 Republican lawmakers, including 27 senators, in pushing back against votes movement. I hope, if you get a chance, thank Mike Crapo and those Republicans who signed on. This was the biggest pushback against any Trump administration action since the beginning of his second term. On a personal basis, I intend to continue working with my colleagues, frankly, on both sides of the aisle, to hold this administration accountable and restore the CDFI fund to its full capacity. If there's any lesson here, it's that we cannot solve our deepest challenges through ideology. It takes us all working together as a coalition to make change. That's why I've reached out to my Republican friends and partnered with, for example, Senator Todd Young in advocating for the Neighborhood Homes Investment Act, which offers a common sense, at least partial solution to our affordable housing crisis. This legislation would create tax incentives to build and preserve more than 500,000 single-family homes in under-resourced communities. I'd like to thank you all for being such a key supporter of this legislation and for your role in co-chairing the Neighborhood Homes Coalition. You've been a critical partner in advancing this legislation. Before I go, I do want to address one other issue, and that's the attacks on the Community Reinvestment Act. The CRA is one of the best tools we have to drive investments in our underserved communities, and it's critical that we preserve it so we can continue to bring about this kind of meaningful, non-ideological change. You know better than anyone that barriers to home ownership don't care about zip codes. Once again, congratulations to the National Association of Affordable Housing Lenders on its 35th anniversary, and I wish you a very productive conference.
A spicy video from one of our champions, and we love him for it. So on that note, we will have lunch in the hall, and we'll also set up out here. There's spillover room in the lounge next door for the lunch break, and we will resume promptly at 12:30. Thank you.